Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most and do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
Okay, welcome to The Wealth Flow. My guest today is Troy Eckard. Troy uses 4 decades of oil and gas expertise to lead Eckard Enterprise, LLC, in securing significant investments for high net worth individuals. Since 2019, his company has placed over $850 million in capital across over 90 portfolios, acquiring mineral rights, working interest, and the second largest natural gas pipeline in the Gulf of Mexico. Today, Troy manages over 7,000 wells and has distributed over $110 million in free cash flows to investors within the last 4 years alone. So, Troy, excited to get into this subject with you. Welcome to The Wealth Flow.
Hey, I appreciate it, and I love all those stats. They always sound good, but if you don't have any reference points, like, what the hell does that mean?
Right. Exactly.
Sounds impressive if I had a clue what it means. But, thank you so much for having me on the show. I appreciate it. I look forward to sharing what goes on in the energy business and talking about what we've done and how that is or is not something of significance to brag about.
Yeah, there you go. Okay. No, sounds perfect. And Troy, I like to start with really kind of your background, where you grew up and what got you into oil and gas and, into doing what you're doing currently today.
Yeah, I was going to college in Central Texas, down south of Austin, starving to death, living in a travel trailer in a RV park, me and the other guys that were illegal, mowing grass, trying to survive college. And I had a stepbrother that had started a small investment firm in Dallas, working with high net worth investors, getting them to drill oil and gas wells for tax write-offs. And he stopped by one day and I got a 102 fever. I'm skinny as a rail, starving to death, living in this trailer. And he said, why don't you come to Dallas, finish your college degree up here? I'll put you to work, teach you the investment business. And so he talked me into it. It wasn't hard. And I got involved and I figured out that I liked it. I enjoyed the market. I enjoyed the nuances of oil and gas. And so I started my career in 1985 and here I am 60 years old, almost 40 years in the business. And it's been a great career. I love what I do. I love the space. And it's allowed me to introduce wealthy investors to an asset class otherwise they have no exposure to.
Yeah. Wow. Okay. That's interesting. And so tell me a little bit. So are you in Dallas? Are you still based out of Dallas now?
Yeah, I'm in North Dallas up in Allen, Texas. We're on the north side of town. Dallas is like 12 cities in one, but yeah, I'm
Exactly.
on the north side of town. I've been off and on in Dallas since 1985, watched the city expand and grow, just like the oil and gas industry. Lots of changes, lots of diversity, but I think they kind of run parallel. Traditional real estate and oil and gas run based on technology, and that's what's kind of changed the whole world.
Yeah, for sure. And so tell us a little bit about oil and gas. Obviously, when I think of oil and gas, obviously, I think, when I think oil wells, I think of the old traditional, just what you see in a field kind of moving and doing its thing. And I know there's a lot more to it now than just that, but obviously that's still an avenue as well. Tell us a little bit about what you guys do.
Yeah, so the oil and gas industry is just like traditional real estate. It has 3 different sectors into it, just like traditional real estate. You have somebody who likes raw land development. They want to go out and find some acreage, entitle it, annex it, and say, hey, I'm going to turn this into a big box shopping center. Well, that's kind of like buying mineral leases or leasing minerals and saying, we plan on drilling wells based on our best expertise of knowing what this eventually will look like. So that's what we call upstream. That's drilling and seismic and going out and finding raw land, developing it. And then you end up moving into the vertical aspect of real estate where somebody says, I want to put the shopping center. I'm going to go out and get Target or a Home Depot. And that's kind of like an Exxon says, okay, now that I've leased it, now I want to develop it, harvest it, put the equipment in the wells, and then eventually get downstream, which is now property management and REITs to say, okay, thanks for producing it. Now it's going to last 10, 20, 30 years. We'll just extract the revenue from that day-to-day production. So that's more what we call the production side or the downstream side where we produce it. It goes to refineries and gets delivered to your home. So there's a really strong parallel between traditional real estate and oil and gas. It just has a different nomenclature or name to it. I've always focused my career on what we call the upstream. I like the seismic, the lease, the minerals, the drilling, because I believe it has the highest profitability, has the highest risk, obviously, but it has the highest profitability. But it also has the most broad market opportunity. You have more opportunity on that side of the energy business than you do, let's say, in refining. I can't go build a $12 billion refinery. So as a result, it's entry level for capital, it's risk, it's barrier to entry, it's all about timing. So it's a very complex industry, but if you focus and you break it down piece by piece, you can become a really, really good expert at the area that you do focus in. And that's what I've done my whole career.
Okay. And so when you look at mineral leases, do you have, so at what part does your company get involved? Are you actually securing the various mineral leases, working with, I guess what they call landmen or going out there and actually, securing them? Or what does that look like?
Yeah, so up until about 6 years ago, all we did for the most part was we drilled wells. So we would hire landmen. We'd go negotiate with surface owners and say, hey, listen, Mr. Farmer, we want to lease your mineral rights. We want to pay you so much to have the opportunity to drill. We're going to hire geologists, geophysicists. We know there's a reservoir that we want to test. And we'd go out and lease the minerals from that particular mineral owner. Well, things changed dramatically about 9 or 10 years ago. And that changed because of the shale evolution or revolution, which is now instead of worried about whether we're going to drill a commercial well or a dry hole, it's more about we have this enormous buried Grand Canyons, 40 million acres of huge oil and gas reserves. Now it's a matter of capital deployment, securing your position. It's more about now, defining your pathway going forward. So our landmen today are more interested in going and finding that mineral owner, not to lease it. We want to buy it. We want to own it for the next 100 plus years of commercial economic value, because instead of guessing where that little 7-inch hole in the ground goes to drill a vertical well, now we have an ocean of 40 million acres. And we know that the probability of success is 99% chance I'm going to make a good well every time I drill. So I want to own the minerals versus lease it because I want the lifetime revenue and I want all reservoirs and all depths. Owning it, I get that. When I lease it, I may be limited to a specific zone or specific time frame.
Okay. And when you look at a piece of land that large, are you having to buy back maybe mineral rights that have been already sold, or is a lot of this virgin land that's, no one's ever transferred the mineral rights the first go round, or do you get a whole bunch of all that?
You're going to get a bunch of it. So think about it this way. Back in traditional drilling, you were looking for the structural high. You look for buried mountain ranges. The Rocky Mountains buried 100 million years ago. Mm-hmm. Oil and gas migrates to the high point because the pressure of the earth pushes down. And so all that oil and gas migrates to the point trying to escape to the surface, just pressure, right? Well, that was the original way to drill. And then what we discovered is that when those mountain ranges were developed 100 million years ago, the erosion of wind and water and fluid movement pushed all the organic material, dead plants and animals, down to the basin. So like driving from Phoenix to Tucson, you have mountain ranges and then you have this open desert. We never looked at the desert before because we thought, well, oil and gas is supposed to be on the high point. We're looking at the mountains. What we discovered is that the thickest, highest concentration of organic material, which ultimately becomes oil and gas, it eroded and it's all thick sand buried at the bottom, but it's just coarse sand. The reason that's important is that when we started to go out looking to buy minerals, a lot of those minerals were leased in the 1950s, 1940s, and they still are held by that original lessee because they have vertical wells that are still producing. but they don't have the money or the technology to drill deeper. So there was a lot of trading where companies would go in and buy out that existing leasehold position, buy the producing wells, buy the rights, or they would transfer rights. So that combined with the fact that now you don't have to pick that mountain range, you pick the entire desert floor, it opened up areas of leasing and minerals that had never been considered commercially productive. People that thought, I have no oil and gas on my land for sure. Now all of a sudden they're finding out they're sitting on this enormous deposits of oil and gas in these shale reservoirs. And so it ignited the entire country across like 15 states where landowners who never saw a well drilled before now have these expensive $10 million wells being drilled on their property, making them millions of dollars a month in revenue. It changed the whole dynamics of the oil and gas industry in the U.S. Been actually fun. I say it was the largest land rush since the gold rush back in the 1800s, because it was find a lease it, drill a well, hold it in perpetuity, and now you own literally the U.S.'s economic future when it comes to fossil fuel. So it's been fun. It's a wild, wild game. It's a great game. It's extremely profitable, but you got to have expertise and knowledge. Otherwise, you're just throwing darts at a board with a blindfold on.
Yeah. And so, you mentioned geologists, and so how are you able to find where these things? I mean, is it pretty well known that, hey, across these states, this is pretty well mapped out where you can tap into these large reservoirs?
Yeah, you could take an idiot drunk on tequila, put his head on a bat, and spin him in a circle, and he can go find acres to buy in the Permian Basin, the Anadarko, North Dakota, Pennsylvania. It's not so buying minerals is easy. You can walk into a truck stop in Oklahoma and it says minerals for sale on the board on the way to the bathroom. So buying minerals is easy. Every single piece of land in the United States got three rights. You got your surface rights, what's attached to the surface. You got your air rights, everything above it, and you got your natural resource rights, which is mineral rights. So everybody has that when you buy your house or your retail center or your AutoZone car parts store, right? Problem is 95% does not have oil and gas underneath it. So with that being said, what really advanced oil and gas mineral rights as an asset class that really is available to high net worth investors is two things. What I just described, which is I don't have to guess the 300 acres that might have oil and gas. Now it's 40 million acres. So the risk diminished by 95+%, right? That's one. And number two, the other thing is technology. And what technology did, if you wanted to ask Exxon where they drilled and how they drilled the well, they were like, it's confidential, proprietary. We're not going to talk to you. But when everything got uploaded on the internet and they did scraping of data, physical paper scraping out of courthouse and records and completion records and drilling records and permits, companies out there went and set up these subscription-based firms and said, we're going to take all that data, scrape it into our files, put it onto the internet, and Troy, you and other companies can now subscribe to that, and you get every piece of information from every single well drilled in the United States. At a fingertip, I can find every well in the United States has ever been drilled and every record they've ever had. That's all been in the last 7 or 8 years. I never had that before.
Wow. Yeah.
So now you can run a pure analysis. You can run an analysis saying a well drilled here and a well drilled here, different operators, different zones. How do they compare? Now it truly is an analytical game based on enormous amounts of data. And if you know what you're doing and how to manipulate that data so you understand what it means, you now can lead a very, very successful mineral drilling exploration company by using that data. And that's what's evolved in the last 8 or 9 years.
Now, on that data, so you mentioned an oil well drilled here and here, and are you able to actually see what those are yielding as well now? May I assume that there's some kind of taxes or something that are being paid on what's extracted, or how were you able? What kind of reporting, in other words, besides just that we drilled here, how are you knowing what the yield is out of those areas?
It's 100% transparent. So every barrel of oil and gas that's produced in any state, the state wants their severance tax. They want to charge you for the production because you're taking their natural resource. So you have pipelines that measure gas going through it. You have crude oil buyers that measure the oil picked up at the wellhead. Every well in the United States has a designated API number, which means it's like a social security number or a driver's license. So every well in the country has its own number. That number is tied to what it produces in gas, oil, natural gas, liquids. Each buyer picks it up. Each taxing authority gets notified. Each producing pipeline reports to the Federal Energy Regulatory Commission. There's about 22 different checks and balances from the time it's produced till the time it goes into your house or your car, because everybody wants to get their share of fee. And this allows the old day of the movie, like with Daniel Day-Lewis, There Will Be Blood. It's not like that anymore. You don't get to go steal a half a tank of oil and put it in the back of your truck and go sell it in the market. Yeah. It has solar panels. They have digital solar readings 24 hours a day, 7 days a week. There's some production engineers in Houston or Denver or Dallas watching thousands of wells and what it produces every day. And artificial intelligence is just going to improve that efficiency by 20, 30, 40%. So today's oil and gas industry is probably one of the most advanced industries we've ever had. We're using the same technology that Elon Musk used for his driverless cars. We're using the same data that NASA uses for triangulation, guiding that drill bit 4 miles in the ground. We have rigs that pick their feet up and walk like Skywalker. It's phenomenal compared to what I saw 40 years ago. So today is more about harvesting than it is exploration. They say, are you in the exploration business? No, I'm in the harvesting business. We know where the oil is. We know how to get it. I like engineers 10 times more than I like geologists because they're going to tell me the most effective way to get it out. A geologist, like a weatherman, they're wrong 9 times out of 10 and they still keep their jobs. So I like engineers better.
Yeah, for sure. Wow. And so, and you mentioned a couple things there, whether it be oil, natural gas. So what all do you mainly, you deal with both? And what all do you get out of, and are these traditional oil wells? Are you doing the fracking? What does that look like?
So I'll answer the last question first. I don't drill any vertical wells anymore. Why do I want to take a 60% chance of a dry hole? So all I drill is shale formations with horizontal application because horizontal drilling gives me the greatest penetration and the largest access to those reservoirs. The frac stimulation is just like jackhammering a wet concrete driveway. I'm just creating cracks by pumping in sand to let the oil and gas in that formation flow. But let's use oil and gas in an example that your listeners can understand. If you took a 3-liter bottle of Coke and a 16-ounce bottle of Coke, the 16-ounce bottle of Coke is the type of vertical wells we drilled the last 50 years. Small in size, you punch a hole in it, you get to the reservoir, it kicks out a lot of that Coke when you shake it up, but it's pretty much dry in 5 to 7 years. Now what we're drilling is these enormous reservoirs. The orifice or the size of the opening is like a 3-liter Coke, so that's what the horizontal is. It gives you a bigger exposure reservoir. We frack it by overpressuring it. That reservoir wants to kick it out. When it comes out, we might get 1/3 to 40% of all the oil and gas from that well in the first 5 years. It allows us to spend $10 million, get the $10 million back very quickly and redeploy it. So they're rotating, these oil companies like ours are rotating millions and tens of millions of dollars every 12, 24, 36 months because the wells are like shaking that 3-liter Coke. But here's the cool part. Once I get that first 20, 30% out of that 3-liter Coke from fracking it and overpressurizing it, I got 25 to 50 years of additional production life. It doesn't die in 7 years. I've got a 20-plus year economic life, which means we can drill, get our money back, drill another 10,000 wells, and we're adding 50 to 100 years of productive life to the U.S. energy cycle. That's why oil and gas is the favored energy fuel, because we have solved the equation. Horizontal fracking has solved America's energy problem.
Yeah, that's fascinating. And so and with that horizontal drilling, are you able to do, natural gas as well? So it does oil.
Yeah, either one. Basically, Keith, what happens is certain reservoirs like the Marcellus in Pennsylvania is what they call a dry gas basin. The gas comes out. It has very little condensate. It has very little oil. It's pretty much a dry gas. Dry gas, let's call it 1,000 British thermal units, BTU, means it takes a little processing. After a little bit of processing, I can run it straight to your fireplace, your house, and you can burn it at the fingertip. Well, if you look at the measurable value of oil versus natural gas, really liquids are more valuable. I want oil because it pays more. I want oil because it's more marketable across multiple countries. I can put it on a tanker. We make synthetics and plastics and highways and asphalt from oil. Gas has its value too, like fertilizer, right? So when I'm looking at an investment, I really want to focus on a liquids-rich reservoir that has great oil, but it has what's called associated gas. When you think about it from an analogy, the associated gas is shaking up that 3-liter Coke, and that bubbling inside is the gas. The liquid is the Coke, right? So I'm getting a lot of Coke out, but I get a lot of fizz with it. That fizz is the natural gas. The natural gas creates expansion in the reservoir, and it drags that oil with it. So you want that gas because you don't want to have a flat Coke. There's a lot of reservoirs out there where it doesn't have a lot of gas, and that oil does not move. You leave a lot of oil in place. It's like having a flat Coke. So our company balances between a oil concentrated area geology-wise that has a lot of associated gas. We do have positions in heavy gas areas, but it's gas that does have liquid with it. We kind of avoid those really dry gas basins because we just don't think there's enough juice in the lemon to make it worthwhile for us. We just have a preference for a liquids rich kind of a basin. That would be Oklahoma and Texas.
Okay. And so from an investment standpoint, you're starting with what you called upstream, but are you then going from there to doing the vertical as far as like the equipment? I mean, even though you're drilling horizontally, you're still bringing in equipment that's going to be drilling, and is that still fall in that middle section when you were first laying out the the traditional raw land, upstream, vertical, and then the production side where you're just basically taking over existing production?
So the one thing I always want to stress is a jack of all trades and a master of nothing is not what I like. So our expertise is in drilling and minerals. 75% of our business today is buying mineral rights. Why do I like that? All I have to do is have a prudent operator like Exxon or Chevron or one of these majors that have leased the minerals. I now have a HR staff of $1 billion a year, best geologists, best engineers in the world, deciding where to drill on my minerals and how to drill it and how to sell the oil, how to market the gas. I like being in the mineral position because I have no cash calls, no debt, no exposure, no capital calls. So it's like being in a 5-star limousine and you know where you're going. You're going to the money slot machine, but you don't have any risk. Now, when you ask the question, do we actually, participate in the things like pipelines and operation and drilling and equipment? We have a company called Eckard Energy. We actually operate and drill our own wells. At that point, there are minerals. We actually can own the minerals under wells we want to drill. We then become the general contractor. We negotiate a drilling contract agreement with a drilling company. We get all the material, supplies, personnel. We'll drill the well. We'll functionally do the back office, operating the economics, paying the bills, receiving the revenue, selling the oil and gas, and then distribute it to the owners of that well. So we have that. And then we also own pipelines. We own the second largest gas pipeline in the Gulf of Mexico. It's about 1,600 miles of line called Connecticut Partners. That pipeline moves gas from platforms in the Gulf and in the Gulf of Mexico back to shore. Those guys produce oil. They have associated gas. They have gas wells. We pick up their gas like a toll road. They pay us a tariff. And we bought that company last December, and we're building that out. So we're kind of a fully integrated company. We own the minerals. Now we're drilling wells, and we own pipelines. We're going to expand all three. We'll probably cross $1 billion worth of minerals that we own, and with our partners in 2025, we'll probably cross $1 billion. We think we'll do about 250 to 400 million next year in drilling, and we hope to pick up another 100 to 250 million dollars in pipeline assets in 2025 as well. Our goal is in 5 years is to have a multi-billion-dollar vertically integrated platform between us and our high net worth investors involved in upstream and midstream.
Okay. And one question I had on something that you just brought up. So, on the oil rigs that are out in the Gulf, those, in order to get the, say, gas back to the shore, they're tying in oftentimes into somebody's pipeline. And in a lot of cases, it sounds like it may be yours. So
Right.
You have just like a pipeline that sits, on the ocean floor and runs across a certain spot? Is that why some of them are kind of in a row, or do they? Who's responsible for tying into that? Is that each individual? I'm just curious on how all that stuff works.
I think that's what I like about the Gulf of Mexico pipeline asset. I started that company back in 2009. What I like about it, it's pretty much phenomenal what they can do at the ocean floor at 500 to 5,000 feet deep. But what happens is they'll take different types of platforms, either anchored to the ocean floor, or they're floating like on buoys. And then what they'll do is they'll connect either by robotic or by divers. They'll connect the connectivity to the wellhead at the bottom, bring it back to the platform, and the platform acts like a control center. You might have 20 wells producing 10 miles out from each direction, all come back to a central platform. Then that platform will separate the oil, put it in an oil line, separate the gas, put it in a gas line. And then it worked through like a set of Tinker Toy pipelines. It's a 36-inch line, connects to a 20-inch line, goes to a 12-inch line, and it finally gets to shore. It goes to a gas plant that Kinder Morgan owns or somebody else owns. They'll dump it in what they call the front gate of the plant. It comes in with liquids. It's all rich with, condensate in it. They'll run it in the plant. They'll squeeze it. They'll process it. Then it comes out the tailgate. Dry gas heads to Philadelphia to be sold at the burner tip. The liquids get compressed, and they goes to refining. It goes to fertilizer manufacturer, or whatever's going to use it. So these chemical engineers, these engineers that run the oil and gas are just phenomenal. I mean, I'm just a knucklehead guy that knows about investments, but when I sit back and watch what they do on the ocean floor and what they do in the ocean, what they're doing with this fracking, we've got brilliant minds that are involved in oil and gas from an engineering standpoint. And I'm amazed at how they do it and the way it works. It's quite phenomenal.
Yeah, that is. Wow. Yeah, and you're expecting this year. So I forget the number that you threw out that you guys are expecting to be able to produce this year, but is that up from last year? And obviously, we just had an election, and things should get I would assume much better from an oil and gas standpoint in the years ahead.
Yeah, I think it's a combination of three things. So when we started the conversation, we've actually sent out $143 million in revenue in the last 4.5 years, not 110. We're averaging about 5 to 6 million a month. Next year, I think we'll send out between 65 and 100 million next year alone. We got 7,000 wells online now. We've got about 1,100 wells that have been drilled, all being completed, turned online. So we have this tsunami of cash flow coming out. Gas is up today substantially, about 15% today. Oil's back over $70. So our cash flow next year, we hope 65 to 100 million out to our partners. But with President Trump in office, there's a lot of pros and cons. The first con is President Trump saw in his first presidential term, he loves cheap energy. He doesn't feel sorry for oil companies. If he can get us to produce it at $55 a barrel, he's a happy guy, because when oil and gas prices are cheap, supplies are cheap, transportation, utilities, all the cost of other businesses is cheap. He doesn't give a damn about oil and gas companies, but he wants us to drill, baby, drill, which is okay. But the problem we have is that the positive side is he's going to come in with a pro-business, pro-growth, which means increased demand. We also have seen the cost of drilling go up because labor, insurance. You can't ask us to sell it for $55 a barrel when basically we need 65 to 80 to break even or to have a decent rate of return. So you're kind of stuck with the new president saying, I'm going to do three things. I'm going to cut taxes, I'm going to grow the economy, and I'm going to get rid of inflation. They don't work like that. You can't have A and B and get C. Something gives. So my guess is he's going to come in with his pro-growth. He's going to try to cut taxes, put more money back in people's pockets. It's going to increase demand. We're going to drill our tails off. We don't have the refineries. We don't have the rigs. And what's going to happen is inflation is going to raise its ugly head. That's why Powell said, I'm not going to raise lower rates anymore. They're going to get in this battle of Trump wants lower rates. Powell's going to say it makes no sense. I'm guessing regardless of where the Fed ends up on the rate, we're going to see massive inflation over the next 2 or 3 years. You can't have all three. Inflation is a great driver for energy. Just today, with gas being up and oil being up, you can automatically add a 1/4 point to inflation rate on the next report, because why? Cost of my gas pump's going to be more, my electricity will be more, the plastic pen I buy is going to be more. That's going to be inflationary by its very nature. Oil does really, really well in inflation, and it actually does really much better when we have a Democrat in office. I almost voted for Kamala Harris. I did, but I didn't do it. I voted for Trump. Because when you look at the pattern, actually oil and gas prices are substantially higher under Democratic-led White House. So Trump's going to add supply, but we're going to probably have a more moderate price. We'll probably stay sub $80 a barrel, sub $3.50 for gas. It'd be great for the economy. We'll make a decent profit, but we're going to drill the heck out of it. He's going to give us tax incentives, and he's going to go back to his same bonus depreciation. He's going to tell everybody, hey, you drill wells as an individual high net worth investor, you're going to get 100% write-off. Go drill wells. He wants us to be at 15 to 18 million barrels a day so we don't have to rely on Russia or Saudi Arabia, which is a smart move. But we've got to be paid at least $70 a barrel, $3.25 for gas, and we just can't justify doing it.
Yeah. Okay. No, that's interesting. That's a little different than what I would have thought, but as you're saying, it makes a whole lot of sense, and that is interesting. Let's talk a little bit about bonus depreciation. So, with bonus depreciation, let's maybe take a step away from just kind of the mechanics of the drilling and the opportunities that are out there, but from an investor standpoint, what are some of the advantages of investing in oil and gas?
Well, number one, at least the way we do it in our company, I don't know of anybody else that does it like we do, Keith, because we do all of our investments with our clients through a purchase sale agreement, which means when you buy minerals, you're not in an LLC, you're not in a special purpose vehicle. You literally own a fractional percentage of every mineral acre. So it's real estate, which is incredibly important because it's the only real estate I know you can buy where there's no holding cost. I don't have property taxes. I don't have maintenance. I don't have insurance. I don't have to mow the grass. I have no obligation for cash costs. So from a pure standpoint of being safer, I don't want to be in a partnership or an LLC. I want to own what I own. So people who have a lot of money tied up in stocks and bonds and real estate are saying, where's an asset that can create monthly cash flow that I don't have to worry about capital calls or debt or any kind of exposure? Minerals are it. We found enormous amounts of high net worth clients who said, gosh, I didn't know this existed. This is perfect. Just a check. I get a distribution every month and I'll get checks for the next 25 to 75 years. The second thing that's important is there's always, I say the economy is like a seesaw, like we played on it as kids, right? And the seesaw is for every brick I put on one side, it causes the other side of the seesaw to respond accordingly. If we have inflation taking place and it takes off, right? Well, that means the profitability of assets that are negatively affected by inflation are going to go down. If I own assets and let's say stocks or bonds or traditional real estate, well, maybe it goes down as a result of inflation, cost of capital, cost of debt goes higher. Well, oil and gas runs the same direction as inflation. As it goes up, oil and gas goes up. So a lot of our clients have figured out it's great to have my traditional portfolio, but I might want to put 5 or 10% in energy because it counterbalances me when other things are not going well. And I think they like that. I think the other thing our investors have really, really gotten accustomed to is they love getting those checks twice a month. Our working interest participation goes out on the 20th. The checks go out on the 25th for minerals, and it is like a slot machine. We've never missed a distribution. There's no negatives. There's no fees, no carries, no back ends. It's straight up. What's yours is yours. They like it. We created an online market. If they get cancer or divorce, they just need to remove their portfolio. They go to our app that we designed called P2P, partner to partner. They sell it. So we're the only alternative asset class that created our own internal market between investors. We don't charge a fee for that. So I tried to sit back over the last 40 years and figure out, in a perfect world, absent anybody else's input, what would Troy want if Troy were Troy's investor? I want to have access, transparency, direct ownership, a way to get out, and I want tons of data I can get on an app 24 hours a day. So we created Eckard Insights as an app. And so I built a business that I don't care if you're the most discerning, wealthy guy out there, if you're just brand new millionaire, you're going to be able to get exactly what you want from our company. That is what's needed in the energy space, Keith. I'll tell you, oil and gas companies are they're the worst and the lousiest marketers on the planet Earth. For 10 years, they've been beaten up by green energy. They have done nothing to defend themselves. And so there's this pre-assumed notion about what it's like to invest in energy. And the fact is they've done a horrible job telling the American public and investors out there why oil and gas is a good investment. They should have hired me a long time ago. They'd have been in better shape, but they didn't do it. So it takes a lot of work to talk to clients because it's a brand new novice idea. They don't get it. That's why I went to this app and this public information and all this online stuff. I made it mainstream where it's never been done that before, you know?
Yeah. And that's interesting that you can get out. So is that typically how somebody would get out is by selling to another investor through the app? Or is there ever a definite, is this a permanent hold type position once you, aside from selling it to another investor?
Yeah. So what happens is that in my experience, 40 years of doing this, we've had deaths and funerals and cancer and divorces, right? And so they'll say, hey, look, my dad owns $1 million in different wells and minerals. And I'll go, what do you want to do? Well, I want to sell. All right, well, we'll give you an offer to buy you out, or we can help you put it on an online brokerage firm. You can go to Clearinghouse, or there's several different sites out there. They're going to charge you a 10% commission. They're going to do this. They're going to discount it. Well, why don't you make me an offer? So we'll make an offer based on engineering modeling. Say, we think your cash flow and your assets are worth X, or I can take that value. If you don't want to accept it, I can offer it out to our other 2,700 millionaires, and it's generally sold. So I have found that 95% of the assets our clients own never leave the Eckard family because everybody else wants to keep buying. Now, let's just say as we reach $1 billion in assets here about the next 60 days, let's just say that there's a larger group out there that says, we know Eckard and his guys own $1 billion in minerals and his cash flowing 14, 18% a year. Let's go make them an offer. Well, because each one of my investors owns a fractional ownership, it's a purchase sale agreement, it's theirs, it's not mine. I would go to the seller and say, look, I own 25%, they own 75%. If you guys want to make an offer, I'll proxy every one of my owners and say, hey, we got a buyer for $2.5 billion for what we paid $1 billion. Let me know if you want to sell, what percentage you want to sell, or you don't want to sell. I don't care. It can be all, some, or all. I'll take that proxy and go back to the buyer and say, hey, out of the 100% that we own, 37.22% want to sell. So out of your $2.5 billion gross offer, 37% is for sale. Okay, great, we'll take it. Then we'll sell it. And then everybody gets their fair pro rata share. It makes it easy. What I wanted to do was give us the ability to internally transact, but not be limited to that. And I can assure you, at least from my perspective, in about 2 years, we have $1 billion of working interest drilled wells and producing wells that we own from what I call an upstream position. We own $1.5 billion to $2 billion of minerals. We're going to get those knocks on the door from the California Teachers Retirement Fund, from a pension fund, from a private equity or hedge fund saying, we want to buy existing mature assets. Eckard, you own a couple of billion. Let's start negotiating. Well, that may be a great way for us as a collective investment group to sell at a higher value, pull our money off the table. Now we're into the zero cost basis and redeploy that capital and go do it again. It's just a perfect cycle using taxes and aggregation to make a maximum value. That's the vision of what we're doing here.
Okay. And if you could maybe talk a little bit about the bonus depreciation. You mentioned when we were talking about just, obviously there's been kind of a decline in that as far as the percentages. And I assume that's the same in oil and gas, but I could be wrong, so I don't want to misspeak. I know in real estate, it's gone from 100% bonus depreciation to 80% to 60%. And so same thing
here.
Okay.
Yeah. So in 1986, Congress decided we were running out of oil. So they decided to give us what's called the Tax Reform Act. And they made oil and gas one of the only immediate tax deductible investments because they wanted to encourage high income earners to invest in domestic oil and gas to help us find oil because we were running out. Well, that has never changed. It's still been there. What Trump did in 2017, President Trump did in 2017, he increased that by saying, instead of just deducting in year one for oil and gas, 60, 70% for the drilling costs, and then you amortize your equipment, you depreciate your leasehold position over 5 to 7 years. He said, we're going to give it all to you at one time. Same ratio. He scaled that back. But even today, regardless of the entire bonus depreciation under President Trump went away, what happens is a guy puts in $1 million without the bonus depreciation that Trump had, you're going to write off 70 to 85% of that investment year one because it's intangible cost, labor, the cost of turning the drill bit to the right. Most of it is intangible. The balance of it would be leasehold cost or equipment, the wellhead, the pipe in the ground, blah, blah, blah. You'll depreciate that over 5 to 7 years. If he puts back the bonus depreciation again at 100%, it's a big advantage as it adds another 25 or 30% in year one. But really, where most people have made a mistake, and I believe 100% mistake, is they look at oil and gas as a tax tool. I want to go get some tax write-offs. Well, if I make $1 million and I owe 37% tax bracket, I'm going to pay $370,000 in taxes, and I'm going to keep the $630,000. Well, people lose their minds. I mean, a good well and a dry hole get the same tax write-off. It's equal. Forget the tax write-offs. Focus on making money. And these investors run around like a bunch of drunk sailors, and they go invest with all these crooks and liars and cheats and thieves. They give them $1 million, they get their tax rough, and they never see the $630,000 return. They never see the other side they wouldn't have paid in taxes. And I say continually, there's too much money to be made in oil and gas. It is a income producing asset. You just get a big, huge bow on it that says you also get to deduct the hell out of it. And the way you got to remember is every oil company does not get a tax write-off. They drill it pure economic. 10 million in, 10 million out. Well, I'm already 63% of their cost. I get a 37% discount to Exxon and everybody else. So why do I want to drill with a no-name promoter or a small guy that's double the price, triple the price, no track record? I do want to save the tax, but hell, I want to make money. Yeah. So I just want to make sure the bonus depreciation is really just a way of rewarding individuals for jumping into the exploration game. But really all I want to do is imitate Exxon and drill the best wells at the best price and make my money back. The taxes are just an added benefit, right?
Yeah,
but
for sure.
It's huge.
Yeah, and I think there has been that in the oil and gas. I know just I by no means do I have the expertise on this, but just in talking with various folks, it seems like that seems to be like the big sale. It's like, okay, you get to write it off, but to be able to see. And so are those kind of you'd mentioned returns, and whatever you're comfortable mentioning, but you'd said somewhere at 14, 18%. I mean, is that pretty well what's expected on something like that? Or
our mineral portfolio across, I don't know, 90, I think we're at 100 portfolio, across 100 portfolios, with about 30% of those portfolios been funded in the last 9 months. We're averaging right at 13% cash on cash across every portfolio. Cash on cash, right? No expenses, no deductions. Our working interest, our drilling is even better. We're averaging about an 83% return. We're about 30% return per annum average across all of our drilling. We've had one bad well out of about 100 wells in the last 6 years. One.
Nice.
And that was drilled 6 years ago at the very beginning. So what we focus on is making money. I tell my investors and I tell people when I go around the country doing presentations and education, I say, look, here's the reality. Okay, if you want to get a full deduction, the reason why the IRS calls it a deduction, right, is because they know you can't get a deduction with the IRS unless you lose money. So I don't like to call it a tax deduction. I call it a tax deferral. Why? I want to defer the tax I owe in 2024, and I want to pay them next year or the year after when I make the income from the well. If you want a deduction, take $1 million, go out in the parking lot, set it on fire. Every time you invest based on a tax deduction, you're going to get screwed. Whether it's carbon sequestration, ATMs, water stations, bad oil and gas deals, all these crooks, they ring the dinner bell to these investors and say tax deduction. My answer is, I don't want a deduction. I want to defer it. You tell me how you're going to make money because I can get a deduction in 5 different investments. What I want to know is how you're going to make me money. Otherwise, I'll be candid, Keith. I get to the end of the year with my CFO and I go, we made this much money. Do we have anything that's going to make me money that I can get tax write-off, such as a really good well to drill? Nope, we can't find any. Pay the taxes. I'll keep the 63% after taxes and smartly invest that in good investments because I work too damn hard for my money. But investors have been trained like dogs the last 20 years. If you say the word tax deduction, it's better than pornography, man. They run as fast as they can run. It's insane.
Yeah. That's great. Good example there. Man. So Troy, is there anything else that about oil and gas, about some of the advantages that, maybe we haven't talked about that you feel like would be important for the listeners to know?
Yeah, I would say that one thing I want to remind everybody, you're either in oil and gas or you're out of oil and gas. This is not like going to Vegas and you have $100 bill in your pocket, you walk by a hot blackjack table and you jump in the open space, put 100 down and you hit a blackjack, you go, hey, I won, and you walk out. Oil and gas is a serious investment. You can make a lot of money at it. So I tell people, don't be a fair-weathered investor. Either you want to be in that space or you don't. And it takes you taking the time to learn about it. But I will tell you this, and this is a fact. So if I were investing in oil and gas, you take the March of 2022 through about March of 2023 when Russia started the war in Ukraine, all right? We made more money in that 9 or 10 months than we'd made in the previous 2 years because oil spiked to $129 and natural gas went to $14. Today, we're at $70 oil and $3.25 gas, and my clients act like they're losing money because, man, we had such a great year last year. Here's the point. If you have an economic model that utilizes reasonable commodity prices, you don't have all this blue sky, what you get is a stable income from oil and gas, whether it's minerals or working it. And what you get is these massive spikes whenever the market turns in your favor. The thing I notice about oil and gas that I enjoy, I'm 60 years old. I've been doing this 40 years. My inbox every day behind me is full of green pocket folders. I have green pocket folders in my office, and we have kind of color code around here. And those are checks coming to me. Every morning I walk in, I've got green pocket folders there from wells I've owned for 20, 30 years. I don't even know how many wells I own anymore. And here's what I want to point to your listeners. Oil and gas is never going to go away, ever. I don't care about windmills or solar panels because why? Everything on your screen and my screen is made from a barrel of oil or molecule of gas, okay? And we may be able to help reduce the reliance on oil and gas by having something like wind or solar, but everything about wind and solar is made from oil and gas as well. So if I want to buy an asset, and I describe it kind of in a blanket page, said, how would you like to own an asset that pays you a check every month? 100% of the market has demand and they consume your product every single day. It's the only natural resource on the planet that once it's used, never returns again. Unlike gold, you can put it in teeth or a watch or ring. It's the only natural resource. Once it is burned and used, it's never to be here again. And it constantly goes up in demand. How would you like to own that? I'm in. And so when you get to the raw functionality of what oil and gas does, to me, the biggest difference between success and failure in oil and gas, and watch, is the who. I've looked at probably 7 oil and gas deals in the last 2 weeks my investors sent me. They're all absolute scams. One is probably a $700 million Ponzi scheme in the making. I'm looking to figure out which organization, the state securities I'm going to turn them into. And the other ones are literally, they've taken the well cost and they marked it up 4 times the price. So the reason I'm pointing this out at the last part of our conversation is if you don't know who the who is and you don't know what you're buying, you actually have a dry hole before you ever wrote the check. They're charging you $28 million for a well that costs $7 million. You write a check for $1 million, they're putting $750,000 in their pocket. They won't be around in the year to tell you the bad news that your well's a great well, but you're never going to make your money back because they ripped you off in the beginning. So you've got to take a serious approach to oil and gas and find the right company. Absent that, you're going to lose your ass. It's a fact.
Yeah, that's and when somebody makes an investment, one other question on that. So are they making an individual, is this part of is this kind of pulled together as part of a fund, or is it on an individual lease? Go ahead.
Not my project. So when we put together a portfolio, like for minerals, we may buy 10 acres in this producing unit with Exxon, 20 acres over here with Chevron, 15 or 50 acres over here with Continental Resources or whatever. We put it all in a single portfolio to meet the financial modeling parameters. And I like that because each company has their own drilling budget, which means they're going to drill wells independent of one another. But also it gives me geology diversification, gives me geography diversification. It gives me timing diversification. So in a normal portfolio, we might have 8 or 9 multi-billion-dollar companies developing minerals we own. Let's say you put in $100,000 out of a $10 million portfolio. You'll own 1%. We'll send you an exhibit that says, here's your fractional share of all the minerals and all the different producing units and all the wells. And here's your title, here's your deeds, here's what you own, and you own your 1% across the board. So, diversification is probably the most abused adjective in the investment world. Diversification is simply to tell you, I've ran out of fees, I can't figure out how to sell what I got, so I'm going to come up with a new product. I'm going to have you diversify so I can charge more fees, annuities, life settlements, viaticals, oil and gas, Bitcoin. And what I keep telling people is, find out what you like, find out what you want to focus on, what you enjoy, what meets your financial parameters. And the only diversification you need to have is maybe you're not buying in the same area, the same geography. Let's say you love self-storage. Stay with self-storage, just buy them in different geographies, different cities, different towns, because otherwise you're going to get burned. Trust me, I'm a guy talking to myself when I say this. I've been in every wild-ass investment you can think of. And I look back now going like, God, if I just missed 90% of those, I'd be so much richer. Diversification just means a big hole in your pocket,
Exactly. Well, Troy, this has been awesome, man. I've really enjoyed hearing it, and just you've taken this, a ton of information to think about for sure. How can the investors find out more about Eckard Enterprises, and if they want to invest with you?
I think the simplest thing to do is go to eckardenterprises.com. And then what you can do is when you get on there, we have Eckard Insights. Okay. Eckard Insights is the app we built. You don't have to be accredited. You don't have to you invest. We're not going to sell your name. With Eckard Insights, though, it gets you access to all the educational videos. Think of any topic you can think of, and I've probably done an educational video on it. And it allows you to take your time at your own leisure to learn about what we do, how it works. And then you say, okay, I like what I see now. I want to invest. We've got 7 salaried wealth managers. All they do is manage our clients' accounts. There's no commissions. There are no pressures. There's no goals. You put in $5,000 or $5 million, they don't get paid a dime more. I just don't like aggressive salesmen. And I tell my staff, we're here to assist investors to make decisions on what's best for them. If we happen to get their business, great. If we don't get their business, then help them to avoid the bad actors and send them on their way. But EckardEnterprises.com. Now, I will do something that most chairmen and founders don't do. My cell phone number is 469-422-1781. You can call me, you can text me, and you can say, I want to talk to you about this, or I want to invest, or I want to ask questions. And let me tell you why I do that. If I'm the guy that's in the kitchen deciding what we're going to eat, you sure as heck want to know I'm going to eat it, but you also want to know that I know what I'm doing. And so I have always made myself accessible to all of my clients. I'm probably the most accessible chairman you'll ever meet because I love what I do. I love my partners. My goal is simple. I make you a lot of money. You're going to be my partner for life. I don't know why everybody else doesn't get that. Just make your clients a lot of money. You don't have to find money. All you have to do is just keep doing a good job. And people just don't get that. Make your clients money, period.
There you go. Awesome. All right. Well, I've got 2 other questions that I ask every guest. And the first one is, any advice you would give somebody who's maybe just starting out in their investment journey?
Start small. I would say Rome wasn't built in a day. And to be candid with you, I think if you figure out how to get you a drip investment where you're directly investing in stocks like Exxon or Procter & Gamble, it's a great way to experience stock prices. If you're going to invest in real estate, don't try to buy the biggest property. Buy something that you can manage and handle. You as a novice investor will be shocked at how fast your assets and wealth will grow by taking one little baby step at a time and stop worrying about what the other guy's done. Don't try to compare yourself to everybody else. One bite at a time, one step at a time, highly conservative until you get your feet underneath you. Otherwise, you're just hoping that you catch a moving star, and that's not going to happen. You're going to get clobbered. Just take your time.
Yeah, I think that's great advice. One last question for you, Troy. How about a book recommendation? Doesn't have to be oil and gas related, but it certainly can be. Just something that you've read that's been impactful.
Right there. Good to Great.
Good to Great.
I would tell you why I like Good to Great. And you got to be candid with you. I probably have 1,000 books on my shelf. I read about 4 chapters and I put the book up because I'm bored. I'm ADD off the chart. What I liked about Good to Great, it really changed my company because what it essentially is, it followed my father's philosophy. My father's philosophy was very simple. He said, son, when you grow up, you're going to have one of 2 choices. You're either going to be a river or you're going to be a pond. And there's no in between. I go, okay, what does it mean? He goes, well, if you're a pond, it means that you have a lot of stuff that moved in your life, but you get to an end point. And in that pond, everything's dying. It's where catfish live. It's where sludge lives. It's where you have algae. He goes, because it's relying upon brand new resourcing. It wants brand new water to make that pond vibrant again. But basically, a pond's dying every day. He said, whereas a river, it's ever changing. It may not be in the same path, same course, it's ever moving, but it's vibrant, it's alive. It may be fast, it may be slow. Just make your mind of what you want to be. When I read the book Good to Great, it's about the same thing. It basically just says, just because you have everybody on your team, at your company, on your bus, doesn't mean you shouldn't be looking for somebody that's better than the person that's sitting in that seat on the bus. If you want to go from good is just one step away from failure. Great is one step away from successfully creating a company that can outlast you, your life, can outlast the economy, can outlast an election. So I've always had the premise since I read that book. Every day I'm looking at my staff. Are you a gold medal winner? Can I make you a gold medal winner? Do you have the attitude to be a gold medal winner? And if not, I got to keep looking for somebody else that'll sit in your seat. It's not because I don't want you to have a job, not because I'm a harsh guy, but the only way I can keep from being good and failing is I got to work from good to be great every single day, or I'm a failed business. That's why I like that book.
Yeah, love it. All right. Fantastic. Well, Troy, this has been awesome. I really appreciate it. And I think we'll call it a show. Thank you so much.
Thank you. Thanks for having me. I appreciate it.
Yeah.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.